We start off with the markets, and the best performing sector this week, healthcare, up 3%. And with returns like this, we don't need a new drug, Huey. Investors like the ones they have. Whoa. Check it out. Biogen soaring 20% today on positive drug trial data. Regeneron, Gilead, Celgene, Merck, all getting a boost this week. So as a trade war and global growth concerns heat up, is healthcare the ultimate hideout trade, Tim?
Well, I tell you what, I think it's a great sector. If you're just looking at the bottom-up fundamentals, the earnings growth in the sector is around 20%. I think you've taken some of the spotlight from the negative regulatory front off of these guys. And at a time when people are worried about trade, kind of crosshairs, crossfires, whatever you want them to be, yeah, I think it is. I love biotech here. I own Gilead. I own Amgen. I think the IBB is still riding an uptrend from the first quarter of 2016, and we kind of forget about biotech now and again. And I think you look at Biogen, and that story you prefaced with is exactly why people love biotech, because Biogen does nothing for 4 years, even though it's a fundamentally great company with good cash flow, and boom, today you're up 16%.
I mean, this is positive data on an Alzheimer's treatment that would slow down the course of the disease. So a major breakthrough here.
Major breakthrough, and completely caught the street off guard on that from that perspective. So, look, there's not more data on this particular drug for a while. So it's sort of, all clear for Biogen in general. But look at healthcare, look at biotech. I mean, biotech right now, from a generalist perspective, the generalist investor is completely underweight. They're very underweight, biotech in particular. Look at the M&A cycle. Look at some of the desperate deals that have been announced. Novartis makes an acquisition, an $8 billion acquisition of a company, a gene therapy company in April. The company doesn't even have approval for their product yet. So there's a lot of desperation with the larger cap names. I look at Gilead. I say there's a name that's going to have to make some sort of strategic soon. And I think that you're going to see it pay off in the long term.
They made a deal.
They did. They made one. It was small, and it wasn't enough to really get the juices going. But again, look at the way some of these gene therapy drugs are trading. You're going to look at acquisitions there, in my opinion.
To the point where that was not enough for investors. And for investors who had been burned in the sector before because of fears about drug pricing concerns, wars, whatever you want to call it, and then they're waiting for M&A. M&A happens. Nothing happens to the stock. I mean, for investors who were in there, didn't get much out of it, they're sort of like, you know what? Why am I going to be there again?
Well, look, I hate to be the Debbie Downer in this story, but there is actually...
Hi, Debbie. Welcome to the desk.
Thank you.
Nice
I'll be Debbie today. So the one big problem with the healthcare hideout from the trade war is that there is the potential that you could have a limitation of up to 25% of ownership in any company that would benefit from emerging technologies, and biotech is right in that space. So you could really actually see drug companies like Merck. I mean, the smaller emerging biotech and pharma companies would get hit if they had to, divest of Chinese ownership. That's a big deal.
Yeah, are there a lot of companies with Chinese ownership, though?
Yeah, I don't know what the percentage is offhand. I'd be lying if I said that. But I do see the sort of, again, desperate sort of acquisition. You look at Novartis, buying that company. It's a gene therapy company. Look at these gene therapy companies, the way they're trading. There's no question you're going to see basically, I mean, I can name 6 that'll go away. The market cap in them right now is too small to even mention on the show. You're talking about $200 million market cap companies, but they're going to go and probably for significant premiums. I mean, Avexis got taken out for a double in valuation. They paid $8 billion for this company. That's telling you how desperate these larger cap names are to bolt on.
Just stepping back from the details, it's about the sector. What we know is devices have been fantastic. You can look at Edward, Medtronic, Stryker. We know managed care. UNH is one of the now biggest top 50 stocks. It's all about the big drugs. The waiting for the sectors in the big drugs and certain biotech. And for the first time, those are starting to show some life. That's what gets the whole thing going. If you do get a move, Johnson & Johnson started a week and a half ago, but now all of a sudden it's Lilly, now it's Pfizer. Merck is kicking in. That's where the money is. That's the offensive, defensive part of the sector. You can get upside and defensive holdings with them.
I agree with that, and I would highlight something again that David said, which is this A beta for Alzheimer's that Biogen is at with their Japanese partner. Ultimately, this is a very, very exciting moment where people have to make a commitment for the next year.
Right.
Ultimately, I think it gives a long lead time and people to pile into this, and that is the story. And totally agree on United Healthcare. I mean, this has been one of the best performing stocks over the last few years, not just because of a regulatory environment that may be better for them, but ultimately they are growing internationally. Their margins are better, and this story comes right back to the tax deal and the consumer and places where I think they're very well positioned.
I think what's super important to recognize as well is how underweight the generalist population is in these larger cap and even mid cap names. They're completely underweight. And we've been waiting for a long time for that contingency or that investor to come back to the table and actually start playing in this game, and they're starting to come back.
Okay, back to being the Debbie Downer, though. the big cap names are still exposed to this. You look at Merck, you look at Lilly, you still haven't heard any retaliatory measures by the Chinese on the big pharma sector. So they could actually be potentially exposed in this.
Yeah.
And there are other ways to play healthcare. For example, you could play the healthcare REITs. Healthcare REITs in the managed care space, I mean, that's a big and growing space. We have a huge aging population. So that's another way of playing the healthcare space, is basically playing it through.
You just don't like drugs.
I just don't like drugs. Don't
like biotech.
do drugs. Just say no.
Just say no to drugs.
Oh.
I like the XBI. I still like the XBI over the IBBs. I'll tell you, from an M&A perspective, I think that's going to heat up. But I think they're going to perform relatively. They could perform relatively from a relative performance perspective in line going forward, given the fact that a lot of these larger cap names, you're starting to see the generals come back, and the M&A cycle is going to pick up.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.